to my podcast. There is a phrase out there that it is asking to love, care, and share. If you guys want to donate to my podcast, you can do it with Podbeans. I will appreciate that. That will continue for us to do the podcast now in times of crisis. Anyways, my name is Jaime Sandoval. My California license number is 02012264, and we only conduct business in California. Okay. Today we're going to be talking about taxes. With this crisis, the main source of the government revenue, it's taxes. Okay. City, counties, federals, everybody rely on taxes, and real estate is an impact. They have an impact when it comes to taxation. So we're going to briefly talk about real property taxes today, okay? A city or county receives most of its operating revenue from the assessment and collection of real estate taxes. Real property taxes are determined according to the value of the real property and are paid annually or semi-annually. These taxes are called ad valorem taxes, which are charged in portion to the value of the property. Real property taxes, it's annual and it's paid by the tax to owner. Annual tax is paid by the owner. There's some specialty property taxes, which is a school tax, parks fees, etc. Documentary transfer tax, gift tax, inheritance tax, income tax, a special streets assessment tax, and Melrose tax. With all of those taxes are applicable when it comes to real estate. Proposition 13 surprised the nation by rolling back the California property tax to 1% of the seller's price, making it the lowest rate in the country here in California. A rough estimate of property tax is approximate 1.25% of the sales price. Transfers of ownership can trigger reassessment. Proposition 58, 60, and 90 have created several changes to Proposition 13. Proposition 58, transfer between parent and child does not trigger a reassessment of the subject property. Proposition 60, transfer from principal residence and county to another property taxes the base tax with you. In Proposition 90, base tax can follow you from county to county with participating counties. Okay. Property taxes are, in effect, liens against a specific property. Property taxes for the following fiscal year become a lien against the property on January 1st of the current year. The timeline of the property taxes, as we know it in the real estate business, no darn fooling around. That is, November 1st is the first installment due, and December 10 is the first installment. The first installment is delinquent. February 1st is the second installment due, and April 10 is the second installment when the second installment is delinquent. No darn fooling around. Okay. Property taxes proration problem. The proration question is who owns how much to whom. Here's the problem. If the seller of the subject property has paid both the first and the second installment of the property taxes for a total annual bill of $2,760, what is the proration of property taxes for both the seller and buyer if the buyer takes possession on May 1st. Escrow prorates property taxes using all assessed value. Okay, so the solution for this is the first step is to determine the amount of taxes per month. The annual tax bill of 2,760 is divided by 12 months to determine that the monthly tax is 230. Since the seller paid the property taxes through the month of June and the buyer took possession of May 1st, 2 months of paid property taxes are owed the seller. The seller buyer will owe the seller for 2 months, May and June, and that were already paid by the seller. This amount will be 460. Two times 230 equals 460. What are the exceptions of homeowner's property tax? Homeowner property tax exception is 7,000 of the assessed value. The homeowner's property tax exception is a deduction of the property tax bill of the first 7,000 of assessed value of an owner occupied property. Seniors who are 60 years of age or older and have a household income of 24,000 or less may qualify for this tax postponement assistance program. This program offers them the option of having the state pay all or part of the taxes on their home. In return, a lien is placed on the home for the amount that the state has to pay. There's a veterans exception as well. Any California resident who served in the military during a time of war is entitled to an annual 4,000 property tax exception against the assessed value of one property. This exception also applies to the widowed mother or pensioned father of a deceased veteran. For disabled California veterans who qualify, the assessment limit can be raised up to 100,000. Tax exempt on property. Some properties are partially or totally tax exempt. All real properties owned by the the state, county, or city government is automatically tax exempt. 45% of California is federally owned since it has many national and state parks. Property of non-profit organization used for religious, charitable, medical, or educational purpose is also tax exempt. We have some special assessment tax. A special assessment tax is levied by a city or a county board of supervisors with the voters' approval for the cost of a specific local improvement such as street, sewers, irrigation, or drainage. Assessments are different from property taxes in that they are levied once for a particular work or improvement. The Improvement Bond Act of 1915 finances streets and highway improvements through an assessment to property owners based upon the frontage of property facing the improved street. Through the issuance of municipal bonds, it allows property owners up to 30 years to pay off their portion of the improvement assessment. The Melrose Community Facility Act. The act is another type of improvement bond, and municipal bonds issued to bond streets, sewers, and other infrastructure needs before a housing development is built. The Melrose Rose liens, that's what it's called. The primary resident's responsibility for disclosure of any Melrose Rose bonds lies with the seller. Okay. The tax that is acquired through documentary transfer. Documentary transfer taxes are paid only to the new amount of money, not on any assumed finance. The documentary transfer tax is a tax that is applied to the consideration paid or money borrowed when transferring property, except for any remaining loans or liens on the property. The tax is computed at a rate of 55 cents for each $500, or $1.10 per 1,000, for consideration or any fractions thereof. Gift and state taxes. Both a husband and wife may now give away 1 million each over a lifetime without paying any gift tax. A donor is the person given the property as a gift. The donee is the person receiving the gift. The federal state tax return must be filed for the state of every resident of the United States whose gross state exceeds $2 million in value at the date of death as of 2008 and 3,500,000 as of 2009. In 1982, California repealed both the gift and inheritance tax. Federal and state income taxes. In California has both state and federal income taxes, making us among the most taxed people in the United States. Taxes on personal residence. Deductions of interest on your home loan from your income taxes is one of the major tax advantage of owning real estate. The deduction of property tax is due to the taxes on your property taxes on your first and second homes are deductible from your income taxes. The prepayment penalties can also be deducted from your income tax. When there's a sale of a residence, the capital gains exclusion is by far your best tax benefit of home ownership. Federal laws allow a taxpayer to exclude up to $250,000 of gain for each individual, $500 for a married couple. These benefits can only be used once every 2 years for a residence. Taxes for income-producing properties. Investors can deduct mortgage interest on loans, property taxes, prepayment penalties, operating expenses, depreciation of improvements. Depreciation on a business property. The depreciation for tax purpose is yearly tax deduction for wear and tear on improved investments property that is deducted from the taxpayer's income on his or her income tax. Only buildings and other improvements can be depreciated, not the land. Residential properties can be depreciated for 27.5 years as straight line, and commercial properties are 39 years as straight line. The advantage of sell leaseback. If the owners of a business sells his or her building for cash and then leases it back, the seller becomes a lessee and the buyer the lessor. The advantage of the seller is all lease payments can be deducted from income taxes and he receives cash for the building. The advantage to the buyer is he can use the purchase price as a new basis for depreciation and establish a new depreciation schedule. The sale of real property, capital assets. In real estate, a capital asset includes a personal residence and any other real estate because they are long-term investments. Capital gains are taxes at a lower rate than ordinary income. Capital losses can be deducted from capital gains. Federal income tax rates. Income tax rates are progressive. Progressive taxes are taxes where the rates increase as the amount to be taxed increases. The more you make, the more you pay. Marginal tax rate is the rate that the next dollar earns puts you into. Regressive taxes use the same rate no matter how much you make. For example, sales tax is a regressive tax. The alternative minimum tax. The alternative minimum tax requires taxpayers who make above a certain amount of gross income to figure their taxes twice. They first do their taxes using the actual itemized deduction method, then using the AMT rate and pay whichever tax is higher. The IRS has a specific methods for determining a profit or loss from the sales of real estate. For example, the cost basis or the purchase price is of a property is 500,000. If you do improvements of it for 200,000, you get a 700,000 value minus depreciation for this property, which is making a number of 30,200. So the adjusted cost base will go down to 669,800. The other example is the sale price of $1 million minus the sales expense of 32,500. The adjusted price will be 967,500. So the step 3, we adjust the sale price 967,500 and the adjust cost base, which was on the first example 669,800. You have a gain of 297,700. The installment sale and exchange. An installment sale is the sale of real estate in which the payments for the property extend over more than 1 year calendar. Installment sales are used because a gain is only taxed in the year that is received, spreading the gain over several years. The exchange tax defer uses the simultaneous 1031 exchange, a starker delay exchange, and the reverse mortgage 1031 exchange. The dealer property. The dealer property is the investor of properties held primarily for sale to customers. Dealer properties do not qualify for tax-free exchange. Okay. When dealing with foreign investors, the buyer is required to set aside 10% of the purchase price for the IRS. And if this amount is not set aside, the broker may be liable for the full amount of the tax paid. Estate tax collection requirement and exceptions. The state requires a 3.3% of the sale price to set aside from foreign investors to franchise tax board. The exception from the buyer withholding 3.3% of the sales price for the franchise tax boards are: if the sale price is 100,000 or less, property is seller principal residence under certain conditions, seller signs California residence declaration, and seller receives a waiver franchise tax board form 593C. Other taxes paid by brokers are the following: a business license tax. A city may levy a tax against a real estate brokerage firm which is based upon the gross receipts through a business license tax. So there you go, folks. We just spoke a little bit about the taxation here in the United States, and that's how you satisfy Uncle Sam. So we went over Proposition 13, a specific lien, timetables, homeowners tax exception, disabled and senior, and tax exempt properties. We went over special assessment tax such as the Improvement Bond Act of 1915, and the Mellow Rose. We went over documentary transfer tax, gift and state tax, federal and state income taxes, taxes on personal residence. Okay. In summary, we have taxes for income producing properties, sales of real property, installment sales and exchange, dealer property, and other taxes paid by brokers. Once again, folks, thank you for listening. My name is Jaime Sandoval, California license number 02012264. My phone number is 562-259-3368. Email address is sfandicrealty@gmail.com. And I'm right here to help you if you have any questions or if you want to give an advice. I take all the knowledge that other people have because I want to enrich myself as well. But for every listing, we are charging a 6%, and that is going to be the standard of real estate. Thank you so much. Again, stay safe, wash your hands, practice social distancing, and until the next podcast, love, share, and care. Thank you so much. Have a great day.